All right, let me take you on a little journey here. Right? Imagine you're on a ship in rough seas. Two lifeboats hang on the side. One lifeboat is made of solid metal, petty, reliable, tested for centuries. The other is made of an experimental composite material, lightweight, fast, but never tested in a real storm. Well, quite frankly, when the waves are calm, their experimental boat looks exciting. After all, it's got a new motor and engine. It's a little different. But frankly, when the storm clouds gather, when the wind shifts, when the ship starts to tilt, yeah, don't choose the boat that's trendy. You choose the boat that's proven. And that's exactly what we're watching right now in real time, as there is a huge shift that's taking place between the contract gold and silver price. So the spot price, as well as the physical markets, which are now beginning, well, about a year ago, really beginning their role in really determining true price discovery. But this is what I found super interesting. And that is Bitcoin lose to gold as debasement trade with Bitcoin at 2-year lows. Here's the headline, right? But what does that really mean? Because for years, Bitcoin was marketed as the hedge against inflation and money printing, digital gold. They wanted you to believe it. But frankly, when real debasement pressure hit inflation, deficit debt spirals, and with lots of the activity that's happening right now too, Bitcoin doesn't behave like sound money. It behaves like a risk asset. Meanwhile, gold quietly did what gold always does. It held its value, it gained more trust, it attracted capital, and now look at this. Even Wall Street is admitting it. And though this has been true since 2000, since the turn of this century, yeah, now Wall Street's saying, oh yes, gold, gold, gold. But it's been there all along. This is the moment that the narrative cracks, because what is he saying? Bitcoin failed to become investors' choice as the debasement trade. Bitcoin price action slumps, while gold and silver hit repeat all-time highs. And of course, they're doing it again today. So Chris Wood at Jeffrey, one of the most respected macro strategists on the street, he didn't just downgrade Bitcoin, he flipped the trade entirely. Buy gold, sell Bitcoin. Why? Because of something most investors aren't even thinking about yet. Quantum computing. Now, quantum computing threatens the cryptographic foundations that Bitcoin and other cryptocurrency rely on. So if quantum breakthroughs accelerate, and they are, Bitcoin's security model becomes vulnerable, but yet gold that doesn't have that problem, it doesn't rely on encryption. It doesn't rely on code. It doesn't rely on electricity. It doesn't rely on trust. Gold is value in its final form and in any final form. And so is, frankly, silver. And then he actually said it out loud. The store of value concept is clearly on a less solid foundation from the view of a long-term portfolio. I mean, come on, you guys, Tatum. What in the world do you think? So that's the whole ball game. Bitcoin's store of value narrative was always theoretical. It was always dependent on adoption, sentiment, and liquidity. And gold's store of value narrative, it's not theoretical, it's historical, it's mathematical, it's civilizational. Gold has been the anchor for 5,000 years. Bitcoin has been around for 15, and not a coincidence when it was born. January of 2009, not a coincidence at all. And when institutions start questioning the store of value foundation, they don't wait, they rotate. And what's particularly interesting right now, to be honest with you, is we are in a bear market in Bitcoin, and yet look at the adoption with the banks and the governments around the world. They're going to shove this down our throats. But what happens when quantum computing really comes to the front? You got a problem. What you're looking at here is the Bitcoin to gold ratio, and it's been breaking down, meaning that gold is outperforming Bitcoin in real terms. The ratio is the truth serum. It strips out the hype, it strips out the headlines, and it strips out the narratives, and it shows what investors actually trust when the system starts to wobble. And right, quite honestly, they trust gold just like they have for 5,000 years. So really, what does all of this mean for you? For anyone trying to protect their wealth in a world of rising debt, rising risk, and rising uncertainty, well, let's go back to those two lifeboats, shall we? Because Bitcoin is innovative. It's interesting. Wall Street certainly adopted it, and it may have a future in one place, but it's still an experiment and one that depends on electricity networks, cryptography, and sentiment. Gold is the proven vessel, and so is silver. The one that's carried civilizations through currency collapses, debt crisis, wars, resets, and transitions. So when the storm gets rough, you don't gamble on the experimental boat. You choose the proven boat, the one that has survived every storm in recorded history, over 400 at them. That's why Jeffrey made the shift. That's why institutions are starting to rotate and starting to look at it differently, even as they are rushing for adoption. This makes us all very vulnerable, and it's why individuals who understand sound money are positioning now. They're not waiting before the next wave hits, because we don't know which wave is going to topple this boat. And when that storm comes, you don't rise, then you're not going to have time to get prepared. That's why it's so important for you to call us and get your sound money strategy in place and executed today, because you can live on, but that is not a very good plan. And if you fail the level of your preparation, you got a problem. Gold is your preparation, and so is silver. So we've got some more things to talk about, because that's what I wanted to talk about specifically today. And I think we should get into it more. But over the weekend, with President Trump really pushing the narrative on Greenland, will treasuries join global bond slide after Japan sell-off? So the bonds are in the news, and considering the fact that the treasuries are the foundation of a global financial system. And let me just remind you of this, right? This is how bonds work. This is how all debts work. So this could be true for any mortgages, for any car, any student debt, not just bonds, okay? So this is how debt works. This is interest rates. This is the principal value. This is when it was issued, right? This is the market value, because they're all issued as a certain level. When interest rates go down, the market value of the debt goes up. When interest rates go up like it is today, particularly on the long end, the market value of that debt goes down. If there is a run on the bank and they're forced to liquidate when it is first of all, it makes it obvious. It's underwater. Remember, we had 15 years of zero interest rates. So that has not been worked through yet, right? But this is the problem right now, because interest rates are going up on a global basis, and that means that the market value of these bonds are going down, and it costs governments, corporations, and individuals more to carry and service this debt. UK approval on China. Embassy paves way for Starmer Beijing trip. It's a little disjointed because this stuff was coming at me pretty fast. So I just grabbed it and threw it on there, because we've also seen where Canada is solidifying their relationship with China. So the level of allies with everything that's going on is shifting, and not necessarily in the US's favor. Can President Trump get everybody, to go along with it? Because I'm not so sure that that's true. We're going to find out, but now I will take questions, and you can see there's just so much that's going on in these markets. And I know both, gold was up above Ford, and there's 700, and spot silver was up above its, I think it got close to $94 the last time I looked. I can't tell you where it is right at this moment, but Bitcoin and cryptocurrencies are down where gold and silver are up. Still not reflecting their fundamental value, but definitely transitioning or continuing the transition to physical price discovery with all the premiums that's in the system. Okay, so now I'll stop talking and let's take some questions from FM3E. Says, Lynette, please tell us what is your opinion regarding current collectible gold coins issued by the Royal Canadian Mint? Do you think they are good protection against confiscation? No, I really don't. They're calling them collectibles, but the question is, can you hold them inside of an IRA? Because that's where you're going to see more truth. If you can hold it inside of an IRA, inside of a retirement plan, then it's really classified as monetary gold. If you cannot, then that's where the collectible is. So the new Royal Canadian Mint coins, that's new stuff. That would be monetary gold. I don't think that it will give you much protection unless they really do give it a different status. So, and I don't see that happening. I'm sorry, but I don't. Plus, when you're talking about Canada, they have no gold reserves. That is a huge problem. So, and watching them solidify a closer relationship with China away from the US, that is not going to make things easier, for us. But closer ties with our neighbors to who we profess to not be friends. I mean, can you see the problem? So I think the news is closing, and it'll be interesting to see what happens. And Ren Pixie asks, hi, Lynette. Hi, everyone. Itchin is collecting pre-65 junk silver, a protection against silver confiscation. I'm thinking they'll be going for the bullion first. And you're absolutely right, because this would be really outside of the norm. They can't go back to prior to 1965, just like they can't go back to prior to 33 and create new ones. So I do believe that that would give you a level of protection. And by the way, I'm not done with it yet, but I am working on a silver confiscation piece and the possibility and probability of that. So bear with me here for a minute. I will get it done. And then we can look at that particular topic in a great more detail, including actually, well, I don't know when we're going to release it, but that could probably be 2 pieces, because I just started recording a series today, the 5 doom loops of a financial crisis. So that kind of covers, I think that probably will go into the collateral piece. So you'll probably be seeing a little bit something about that sooner than later. But poor B asks, confiscation low. Rarely any citizens of North America own gold compared to commercial ownership of physical precious metals. Pre-1929 Great Depression, precious metal citizen ownership was far more, this was kind of like all the plan. But if you notice what is happening to the shift in the digital markets, so the contract markets leading the physical market in price discovery, that takes on a whole another meaning with this. So you can laugh out loud, but in the US, gold has been overtly confiscated 1 time, no 20 to 5 times. To me, that is clear historic precedence. Maybe I'm wrong. So that's why I like the collectibles, because understanding the true value of an ounce of gold, just an ounce of here, this is a new piece, just an ounce of gold. If I can buy these way below the true fundamental value of monetary gold, rock and roll hoochie coo, now I have 1 asset with, if you're holding bullion, you better be right, because if you're wrong, you got a problem. You won't be able to use it in the normal marketplace. I'm not saying they're coming banging on your doors, but you'd have to go to the black market, and you're not going to be able to execute a real strategy that way with this. I got the best of both worlds. It is classified as a collectible which flows into what the Wentoners do for themselves. So rock and roll hoochie coo on that end, and because I can buy them so far below fundamental value, and that alone eats up any fees, any taxes, anything, because the town money strategy is built inside of a complete loop. Therefore, this one thing is whether I'm right or whether I'm wrong. I'm dandy, and I have the kind of gold I can use in the normal marketplace. Do not be short-sighted. That is what I fear most people are. Oh no, that could never happen again. Well, now what are you doing? You're living on opium, and it's not a very good plan. You better be right, because if you're wrong, bend over. What can I say? And this is my view. 1880-75. Does the U.S. actually pay off any of its $38 trillion debt? And remember, that's not with derivatives or off balance sheet or all sorts of other funny accounting tools. And they pay it off when they do the reset with dollars that have zero value. That's that overnight reset. Take something that is used in one place and really has no intrinsic value at all. In fact, the intrinsic value is zero. And it revalues it against gold. That is used in every single sector of the global economy. In fact, I actually did a count, and while this list is not absolutely conclusive, I might have missed some things. There are 33 entities that actually use physical gold. 33.11. This is a physical representation of Bitcoin. One place. 33 places. 33. So what was the question? Does the U.S. actually pay off any of its 38 trillion in debt? No. What they do is they reset the currency, create crisis to justify bringing in the full surveillance currency. But yeah, they repay it with dollars that have zero. First it's less and less value until ultimately zero. Their debts were paid off with this currency that has no value, etc. It's the way it works. And until next we meet, I know we can come together in global unity and demand redeemable gold back in the system again. Let's take our power back, because we really do. We are obligated to leave this world a better place than we found it. And having sound money in the system levels the playing field for everybody. It gives us all our American dream, where we can dream, have those dreams come true, live in a safe place, and be together to support each other. And until next we meet, please be safe out there.